What's going on, guys? Today I have another video for you. Scalping the Australian dollar and the US dollar. Now, before we start, make sure to subscribe, like, comment, whatever. Don't like, don't comment. It's your choice, but make sure to like. So, let's go. So, in front of me is the Australian US dollar. Now, if we take a look at the trend, or rather where the market is going, if we add some EMAs, typically if the 200 EMA is below the 50 and the 50 is below the 20, we are on an uptrend, and we have been here on this uptrend for almost a year, or even over a year. And now suddenly here we had this momentum trend changing direction, where we saw suddenly the 20-day EMA fell below the 200 EMA, and here the 50-day EMA fell also below the 200-day EMA. Now usually when this happens here after the first cross, we saw here quite of bearish movement, but then between the 20-day EMA crossing the 200 EMA and here the 50-day EMA crossing the 200-day EMA, we saw some kind of a sideways movement here, which doesn't happen always, but it does quite often after trend changing momentum, or when some EMAs cross. And so if we are capable of finding this kind of situation where we are heading to the side, we want to scale down to the 1 hour chart, and now here we want to enter some support and resistance lines to figure out where the market is trading, or within what ranges. And here, if we add some support and resistance lines on the 1 hour chart, we can see here a couple of ones. And the next thing we want to determine is, or what we want to look at is actually that we are seeing here some kind of bullish momentums, and of course also some bearish momentums in the other directions. Now, for the scalping strategy, it is simple. We want to trade within this range here between the support and resistance lines on the 1 hour chart. We want to scale down to the 5-minute chart, and obviously what we are looking at is, here you can always see after retesting the support line, the lowest point most of the time, which was here, we suddenly saw a turnaround, and every time we saw a turnaround we saw the bullish cross on the 5-minute chart, which is when suddenly the 200 EMA, the blue line, is the lowest one, and the purple one, the 220 EMA, is the highest one, and in between we have the 51. And so now, as we can see here, we are coming back to retest the 200 EMA, which at the same time was here kind of a support and resistance line, because we used it here as a consolidation part where we just traded sideways, and a couple of times we got rejected. For example, like here we came pretty close, not really though. And so we always want to go back to a specific area, which is, especially when it comes to Forex likes to trade and retest kind of support areas, resistance areas, and this is here, as you can see, at around the 200 EMA. So we want to first confirm, like I said, the bullish trend, which happened here after the crossover. Then here the retest of the support area and the retest of the 200 EMA. Now if we add some more indicators, if we add the RSI for example, we can clearly see that here suddenly was kind of a momentum shifting area where we were pretty low at this part. We were at around here, well maybe not that far, but here. And what we can see is that we formed here kind of a very small divergence to the upside. While the market was going lower, the RSI here was going higher, which means that might indicate that suddenly we might see a change here and go to the upside. So this is another indicator to look at the RSI. And now for another one is I like the MACD, which if you take a look at it, we saw here break below the 0 point, and we never here had a cross. Suddenly the cross, first one here, we could say this one was a cross. Hard to say at this point. Maybe if we zoom in we will see a better kind of, we will have a better picture. Now if we really zoom in, now the thing is, if the market is live, or when the market is live, the blue line might cross slightly the orange line and then fall back, because here it looks like we didn't cross it. So this is not a bad indicator or a bad entry. It wouldn't be a bad entry point. However, if we look at the candlestick here isn't really saying much, or rather if we take a look at it, it could indicate a bearish sign, because it looks a little bit kind of bearish. But if you want to enter here and take a trade, the candlestick here wouldn't be the best option. And now if you take it the second cross and take a look at here, suddenly we saw here there's 3 green candlesticks, which are called the 3 white soldiers or whatever. But the thing is, suddenly we had here a very bullish movement and the change of direction with the RSI here, with the MACD. We saw here a cross, and suddenly we went above the 0 point on the MACD as well. And so you want to always look for a bullish candlestick here with the MACD at the 200 EMA, and this is your entry point. So you want to enter somewhere at here at these 3 lines. I mean, the cross happened at around the second one, between the first and the second one. Now you can always zoom down to the 3-minute chart or the 1-minute chart and look for better entry points, because depending on how the 1-minute chart moves, the 5-minute chart moves as well. And so for the stop loss, you always want to target the previous highs, which would be somewhere around here, and the risk reward would be about 1 to 2, since we want to make it simple for you. So this was or is actually the entry point that we are looking for. And of course, if we take a look at the chart for now, we could have entered at a higher point, maybe here where the MACD is suddenly changing direction, but the height here would have been more or less the same. It was the resistance line. Now taking the highest point would have been a risk reward ratio of almost 6 points, but realistically we never know what will happen, and we want to get in and get out as fast as possible when it comes to scalping. So we want to take the previous highs, as I said, which would be the resistance line somewhere here, and this is where you want to exit. So to keep it simple, just take a 1-to-2 risk reward ratio. I mean, if we look at the 1 hour chart here, so we entered somewhere around here, and of course the 1-to-5 risk reward ratio was this one here. You could have suddenly changed your exit point to the resistance line on the 1 hour chart, but as you can see, it doesn't always happen. Here we went to it, here we didn't, here we didn't, here we went to it, here we didn't, here we did again. So of course you can always change, but if you want to do that, make sure that after entering your position, where was our buying point? Okay, so like I said, this big line here would have been the resistance line on the 1 hour chart. You could take it as an exit point, but make sure then to adjust your stop loss and to move it to break even if you are more comfortable in your trades or in what you're doing. But to make it simple, like I said, use a 1-to-2 risk reward ratio. Otherwise, here target the resistance line on the 1 hour chart, and then make sure to adapt your stop loss and to move it to the break-even point. So now we can find a couple of those entry points. We could find one here. We broke slightly below the 200-day 200 EMA, but like I said, Forex likes to move to support and resistance lines, and here we perfectly came to this previous resistance line, now acting as a support line. And again, the RSI here was pretty low, which is something that we always want to look for. We came to the 200 EMA, and here we had the cross on the MACD and this very momentum shifting candlestick. So again, you could have entered here as well, depending where you would have entered, because after a big candlestick we can always see a pullback. So it depends where your entry point would be at this point. Like I said, you can zoom down to a smaller time frame. Stop loss would be slightly at the support line or below it. Here risk reward, to look for it, like I said, depends on your entry. Stop loss can be a little bit adjusted. So another great entry point, like I said. So this kind of entry points can be found anywhere, and of course they also work to the downside. So this was last week. Here we had another one. RSI was pretty low. We came to this support area here at around the EMA, 200 EMA. RSI was low. We had here a cross with a very bullish candlestick. Entry point would be here, and stop loss at the lowest point somewhere around here. Risk reward 1 to 2, and here you go. Oh wait, so somewhere around here. And the next point would have been somewhere here, entry point. So like I said, this kind of patterns happen all the time. You just have to look for the best entry points or specific entry points that I use, since not always we can see a jump back up to the previous highs after retesting the 200 EMA. But this would be a scalping strategy that here, if we take a look at 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's roughly 1 hour until you can take your profit. And here it was similar. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Well, also about 1 hour. And actually, you don't have to trade that much. One trade a day is enough, and you go in and you go out, and that's it. So